Hey guys, we were also engaged in and around Tullow, and in fact I've closed most of my Tullows. The interesting thing about this Bank of England's new head, Andrew Bailey, saying how evil shorters are, etc., and it's unpatriotic and various other malarkey as a central banking cartel that has proliferated debt, funded fracking in America, done all sorts of various sins, pumped up the market, made cheap capital available, created all the imbalances, the hyper-adrenalized US stock market that was running on marginized debt, on self-buybacks, on an extremity, has the cheek to refer to retail short traders. Something I would like him and the Financial Services Authority in the UK to rather think about, rather than us short sellers of all their imbalances that they create, bringing everything back into balance, would be something like Tullow Oil. For a simple example, they created some sort of news story coming out of Ghana of a problem in a mine, and maybe there was. But the interesting thing for me is we were already bearish oil. We were already bearish certain trades like the PAA that we've done a YouTube that is separate to this that you can go find, that we were in from the beginning. And they created some story surrounding Ghana and a problem at one of their sites, etc. Who knows? As I say, probably was some story around it. But it seemed a convenient opportunity for a whole bunch of insiders, in my suspicion, to get out. You got a huge gap. You broke this grind line. You can learn about grind lines on a program here, what they mean. You also got a triggering event on our just-in-time method. And people was, wow, Tullow's trading only 140. What a value buy. It was £2.09 just before the news event. So you can always check events, by the way. It's a useful thing. Many of you will know this, so I'm not teaching everybody anything, but one or two might need a little reminder. Hit the cog. You can get earnings announcements, etc., shown, even dividend splits, etc., on TradingView. It's a good little platform, actually. That was an earnings event. That was a dividend event. This was a news out of the blue about the Ghanaian situation. And how did that earnings go? Whoops, it was a negative surprise. Estimate was 558. The surprise was very, very bad. It was minus 101.84. Wow, I wonder what was happening there. So they seemed to have a lot of troubles coinciding just before the big oil crash that involves Saudi, Russia, and the glut price war, the Aramco listing. Isn't it funny all these things occurred? These bad luck events that saw, I suspect, if we put in volume, quite a bit of people shuffling the share roster, aka potentially insiders getting out. I think I've clicked the volume twice, so let's delete once. There you go. A whole bunch of insiders getting out, potentially here in the first go. So these are the inner core elite of the insiders, is my supposition. It's entirely supposition. But I don't think it was necessarily all a little Central African problem. Sure, something happened. Great chance for those people to get out at the £2.180 level to the 140 level. What a time, 180 and 140. It's a whole bunch worse down here at the 10p level, for example, and I'll take you right into our target of actually 8p. So given the choice of selling something for 180 or 150 or 160 down to 140 versus getting 8 pence for it. Later in December, and I warned after this first gap, I said, regardless of whatever that Ghanaian news is, this is going to single digits in pence. That was something that was 209, good people, in that period, and our community was all over it. It was going to single digits. It was 209 pence, aka £2.09. It then was 140 to 180 pence, and then, wait for it, another stab of bad news, one supposes, and that was a little bit too much for the bulk of the people, and the bulk of your volume is there. Now that is just for a moment some gap. So now the middle management insiders are dumping their share options. He speculates randomly. Who knows? I don't have the call of all their emails that they send. But I think the FCA should be examining this sort of thing. The Bank of England should be examining this sort of thing. Who got out of this share register in these two colossal events? Mark 1, I suspect tier 1 C room CEOs and FOs possibly could potentially be involved. It would just be nice to know that it's not the case and that they're still holding their stock down here at 8 pence, the CEO and the CFO and insider dealings. One would have to wonder. It seemed the orchestration of the oil collapse and all the equities we saw that were set up and the benevolent Saudi Arabian kingdom all coming to the party, wanting to share the largesse with their citizenry all of a sudden. This was all just too much for little old me, and I'm starting to think maybe there's more to it than meets the eye. But then again, I am a conspiracy nut, so please take it with a pinch of salt. Okay, so let's have a little look on that. We will rescale this and bring you into the merry world of where the 8 pence land. Our target for Tullow, 8.4 pence. I said cents, it's Britain. The final gap here was a minor collapse, still from 23 cents to 8 cents. That's still another 60% down. And of course, the poor diehards, many of them were holding for the great rebound of this towering company of great esteem to regain its previous elixir and allure in the oil realm. All this during Greta Green springtime that was brought to us courtesy of all the people that happened to fund Greta and all the people around her. So maybe do some research around that. Your new tax bosses will tax you in a green outfit. So Tullow is largely closed. Possibility for further downside could go to 1 pence for all I know. If you want to chase that, good luck. The best part of the meal, I think, has been eaten. The rest is for the vultures. And thankfully, we were pretty early and we were warning as many as we could on Twitter sphere not to get involved, and that we suspected a single digit and taking the shorts at the same time would materialize as per the target there. Again, risk rewards. Had you been in from the beginning, which is not a claim I'm making, on this particular one, unlike PAA, had you been in from the beginning on a short and you spotted the broadening pattern and got short at that point, let's say you played it safe and put a stop at the top and you went all the way to the target, you would have had yourself a 12.97, which would have been very, very good indeed. So that what was left on the table. We biased short, and actually we forgot about our Tullows until after the Ghanaian crisis. So we came actually post-triggering event in terms of it coming into my worldview. There's too much to watch, too much of the time, but that is a devastating blow to a corporation. Let's just do you a favor and show you the whole story of the mighty Tullow, the round tripper from near to zero to back to near to zero again. And the amount of history I have for you, let's have it in the room here. I think the lowest of lows is 31 pence round about 1999. You did in fact, so let's be clear, this share was at one point very close to £14. £14, good people, just prior to the big first oil collapse post the July 14 oil collapse that took out the 07-08 lows. The very first oil collapse with WTI actually occurred here. And then China took over buying for the rest of the world and took it to new highs, and of course developments and all of that. And next thing you know, you end up with a cheeky little structure we call a friend, and many people on the macro would have said you're getting in late. Well, it was pretty profitable, and look at that volume. I don't think there's that many people of scale left at the new prices. and it is lower than it's ever been since 97. I'm not sure. I expect that was the point of listing for Tullow. I expect that was the point of listing on that date. Otherwise, we would probably have more data. Okay, that's what you have. That was another successful, but not from the very beginning, trade on the short side that you could have benefited from, and it was part of our 360-degree analysis. Came into view, as I mentioned a little later. There were others, but this one we did mention on YouTube as well. We don't mention them all. In the community, the free stuff, the book in and have a chat for us stuff. It's going to be the smart investors. I said many times in Reset, this is a polarizing event. Those that are traditional view equity traders, traditional finance, buy the damn dippers for the last decade and a half that have perpetually been rewarded. I'm here to tell you your strategy is not going to work anymore. I'm here to tell you that the falling knife you're attempting to catch is going to keep falling and going to go through 3 floors, taking you down into hell itself, where you will face bankruptcy with your leveraged longs at every potential bottom. That is the game. This is a polarizing event. The Great Reset is here. It's a different world that's going to emerge from the other side, and that is my take. It may indeed be incorrect. We aren't accurate on everything we say, and neither do we put ourselves forward to be, but that is my suspicion. You either learn to short or you stand the hell back and you let them proliferate your fiat away so that your wealth is destroyed anyway, but you don't lose it as fast and quite as low as if you attempt to buy the lows in the likes of Tullow. One of the guys on tweet said it would be rude not to buy at these levels. Well, you might get another chance to be even less rude at 1p, but who knows. I'm here to give you my view. It's not advice, it's my take. If you want to learn how we are biasing and recognizing these markets, I'm saying to you, equities, be exceedingly cautious. Your pensions are probably wrapped up in them. Your pensions are probably wrapped up in debt. For now, you might be thinking government debt is doing great and it's a great trade. At some point, all things may in fact be destroyed or brought very, very low down. The safe havens are not the safe havens in normal recessions. This is not a normal recession in my view. It is going to be a generationally scarring depression which sees a whole new lunarscape that you come out to in terms of what the control structure has planned for you. In the meantime, government will be the buyer of last resort. Bailouts of all corporations will occur. Don't wait for helicopter cash for individuals. Apart from maybe a bit of UBI and all sorts of compliance issues to collect your UBI and good social score standings, etc. Big corporates, however, will be bought up by government in the name of you with your money proliferated while devalued. So that's what I expect to have happen. Government will become the owner of last resort of almost anything in this new Bolshevik communism that we stand to face. Only it'll be your money, your tax money that they'll be leveraging against your future incomes they will get from your tax money. And as a result, they will proliferate and dilute you, which is effectively continual taxation, because the money you have in your account no longer buys you the same amount of things that it used to do as a result of that proliferation. And you won't notice it during the deflationary period, but you sure as hell will notice it in the gold price, the silver price, and possibly other anti-fiat such as crypto. Okay, that's my simple message to you, and this has been our message before these events started. We've been in this game for an extended period. We've continued to assert these things, and we continue to, in my opinion, be largely validated in this view. Ask the Tullow shareholders, how badly do you want to be a Tullow shareholder at 8p? Join the many in our community and trade the other way. Let them be your liquidity providers. Okay, the sermon is now over. Padre Hunt will stand down from the pulpit. God bless you all. Thank you for following the channel. We appreciate shares and likes. Free stuff in the links below. And those that want to book a call and decide they want to come out of this better in this polarizing event, which is indeed possible, and cash flush, or those that want to be absolutely mullered by what's coming. You choose. Your passivity and your inertia will determine that, what you become in this era. Bye for now. One final thing, guys, you'll see there's a Scandinavian Capital Markets link below. I can tell you that that is the platform I am utilizing probably most in terms of my FX, and I am getting the safety of a European sourced broker with reliable liquidity. I'm really enjoying it. We're using it with a C-Trader platform, which is very, very slick and lots of features without being overly complicated. So if you feel like getting up to 100x on your FX leverage and getting around the European, the American, the Australian limitations on leverage, only people this is difficult for is the US guys. You feel free to click the link below. You'll be served by a great bunch of people. And at the moment I am flying on my account. It helps that this is reset season. We're able to trade things like the USD ruble, the USD Mexican. We've even got the Polish zloty on there, and we've been able to trade with up to 100x margin, and during these incredible periods. So it's been exceedingly profitable. So having the right moment is important in trading, and also having the right tools. And of course, I will always say to you, having the right method. So we've been particularly patient for this particular moment in time for our emerging FX trading special trades, and I'm also very grateful to have the right tools around me. I'd certainly say you can do a lot worse than joining up with the guys below. So the link is there, and use it if it suits. Otherwise, keep well, and I will catch you again soon.